What if I told you could buy your first home with no down payment, no mortgage insurance, below market interest rates, and reduced closing costs? If you've served in the military, this isn't a fantasy. It's your VA loan benefit. I'm Jason Wood. I've got over 20 years lending, specializing in VA loans. Let me walk you through exactly how this works. In today's video, we're specifically going to talk about the first-time home buyer using their VA loan benefit. This is going to be your roadmap to success. So today we're going to cover what the VA loan advantage is, financial preparation for getting your VA loan, getting pre-approved, the home search, making an offer, and closing. So let's talk about why the VA loan is absolutely unbeatable for VA buyers. With the VA loan you get, you know it, zero down payment. It's 100% financing, and that's the biggest headline of the VA loan. But there's other really awesome benefits to it as well. There's no private mortgage insurance. So what the heck is private mortgage insurance? If you've never talked about a mortgage, you probably don't even know what that is. Private mortgage insurance is a benefit for the lender. It's not a benefit for you, but it doesn't apply on VA loans. It applies on FHA loans, it applies on conventional loans, and it applies when you're buying a house and you don't have 20% down payment. You can still buy a house without a VA loan and do less than 20% down payment. But when you do less than 20% down payment, you have mortgage insurance. It's an extra expense that you have to provide an insurance policy for the bank, basically. But with VA, you don't have that, which is super great. You have lower interest rates. Typically, VA loans are 0.3%, maybe even up to 0.5% lower than conventional interest rates. So you have a huge advantage right there with interest rate and monthly payment. You have more flexible credit requirements, which if you watch my last video, and we'll post it here, way more flexible credit with a VA loan than you do on conventional loans. And lower closing costs. There are actually limits on how much you can be charged with closing costs, so it can be a less expensive loan for you to get than other mortgage products out there. So let me put it in perspective for you. Let's take a $300,000 purchase price, a conventional loan with 5% down payment. That's going to be $15,000 in down payment money. The mortgage insurance on a monthly basis is going to run anywhere from $150 to $250 per month. A lot of that depends on credit score, but that's going to be the appropriate range for what that mortgage insurance is going to run you. And the interest rate is going to be higher. So you're going to have that higher monthly expense for the mortgage insurance, and you're going to have a higher interest rate. On the FHA loan, that requires a 3.5% down payment. So on the same $300,000 purchase, you got $10,500 in down payment expense. The mortgage insurance for that is going to be $208, and it sticks around for the life of the loan. So even if you pay that loan down, and you got more than 20% in equity, you're still stuck with that mortgage insurance on the FHA loan. And on top of that, the FHA has what's called the upfront mortgage insurance premium. So you've got the monthly mortgage insurance, plus you've got it tacked onto the front. Now they'll let you finance that on top of the loan, so it's not cash out of your pocket, but still it's an additional expense. It's 1.75% of the loan amount tacked on top. The VA loan, zero down payment, zero mortgage insurance, a one-time funding fee that can be rolled into the cost of the loan, and lower interest rates. For a first-time homebuyer, these differences can mean the difference between buying a home right now or waiting several years as you save up money for a down payment and get credit and everything else in order to buy your first house. That waiting time can be super significant to save up enough down payment money for the conventional or the FHA loan compared to buying with the VA, because as we've experienced, in most instances, real estate values are going up. So if you can get into a house today versus saving for 3 years, well, you've got 3 years of your home appreciating and gaining equity. When you compare these loans over a 5-year period, the VA loan could save you upwards of $30,000. And over a 30-year time frame, $70,000 or more in comparison to some of these other loan products. So let's talk about financial preparation. How do you get yourself set up in a position to get a VA loan? First thing you want to do is check your credit. You need to have an understanding of where your credit score is before you begin. Now, if you watched the last video on our credit requirements for the VA, you'll know that the VA doesn't have a minimum credit score. You can even do a VA loan with no credit score, but it's important to know where you're at, because even if you have a low credit score, that can impact what your financing costs are going to be. You might be paying a little higher in interest rate. You might have some higher closing costs as a result of having that lower credit score. So it's good to know going in approximately what your credit score is. Debt to income ratio calculation. Now, this is something that every mortgage lender does, but if you wanted to be prudent and be financially prepared for this, this is a math equation that you can figure out on your own as well. So here's how it works. You want to take your minimum monthly payments on all credit related items. So student loans, credit cards, auto loans, personal loans, take those minimum payments. So for example, if you have a Visa card and you always throw $60 a month at the Visa card, but the minimum payment is 23, we're just going to use the 23 number for this calculation. So you're going to add up all of those debts, and you're going to divide it by your gross income. So what you take home before taxes are taken out of your paycheck. That's going to give you your current debt to income ratio. When we do your debt to income ratio for the mortgage, we're doing the exact same exercise, and then we're also adding into the debts the proposed mortgage. So we can now figure out what that debt to income ratio is going to be once you have the mortgage in place. For VA loans, I typically like to use, when you're doing rough math like that, a 50% number. Now, for VA loans, oftentimes we can get the debt ratio approved at 60%. I've even seen some above 70% for the right circumstances. But a good rule of thumb is just use 50%. It makes the math super easy and you can figure it out. It's usually going to be pretty close to about what you'll be able to get approved for. And then once we get into actually building your loan profile, we'll be able to manipulate that and let you know if we can actually stretch it higher. And also if that works for you budgetarily, because it may not, stretching it higher may not be in your benefit. The third thing is you need to save. You need to save for closing costs and moving expenses. Now, you hear VA loans being 100% financing. So a lot of people will interpret that to mean, I don't even need a nickel and I can go buy a house. Well, that's not true. You're going to have some cash outlay throughout the purchase process for things like your earnest money deposit, maybe a home inspection, and who knows about closing costs? Did you get this closing costs paid for by the seller? Or are you on the hook to pay for those closing costs? So you need to be prepared to have some money saved up, at least at the bare minimum, for your earnest money deposit and your home inspection. Now, the other thing to be cognizant of is moving expenses. If you don't have a lot to move and you can throw it in the back of a U-Haul and make it easy, probably not a big deal. But if you've got a family, you got a lot of stuff, or you're moving across country, now you could be looking at thousands of dollars in expense, and you need to be prepared for that ahead of time. So how much money do you need for closing costs? I tell people when we're doing our consultation to be prepared to have 2.5% of the purchase price as money stashed away for closing costs. Now, that money could be gifted to you. So you could have a friend or a family member gift that money to you, and that's totally okay. A lot of times what we've seen, and it's pretty common with VA transactions, is to have the seller pay those. That has to be negotiated in your deal. And we've oftentimes done pre-approvals for people who are like, hey, I don't have money for closing costs. Should I even apply? Yes, absolutely. Because you can go make offers on a house and you might get told no by this seller to pay your closing costs. And then 2 houses later, that seller's willing to pay your closing costs. So boom, you could be into a house sooner than you thought. So don't get hung up on the fact that you have to have all this money saved. You'll need a little bit of money, but if you don't have the ability to save a lot of money, just having a little bit might be all you need to get yourself into a house. Another good thing to have some money saved up for are the initial needs once you move in, right? You might need some furniture, maybe some appliances. You might want to do a little bit of fix up around the house, but you might have some early on maintenance things that you want to take care of, or paint a couple of walls, or maybe replace some flooring somewhere. So you need to be prepared to have that kind of money on hand as well if the house you're buying requires it, but definitely a couple bucks saved just in case you need to buy an appliance, some furniture, or fix something real quick. Gather your documentation. This is a really important step. And I think something that people don't oftentimes think of when they're going to buy a house is their documentation. So I'll share with you what the documentation is, but most importantly is you need to know how to get to it, how to access it. I can't tell you how many times I've asked people for documentation for their pre-approval and they don't know where some of the things are, or it's hard to get to, or it's in a box that's in storage and they don't know how they're going to get to it, or they've got it in paper. They don't know how to make it digital. They don't know how to use their phone to scan it, or they don't have a scanner. So understanding where your documents are, how to access them, and if they're paper in a box or in a file cabinet, then you need to know how to get that digital, how to get it into a PDF format. So for documentation, here's what you're going to need. You're going to need your last 2 years W-2 statements, which is your year-end statement that your employer sends you every year that says how much you made. The last 30 days worth of your pay stubs. So if you're still in the military, this is usually just one LES. If you're in a civilian job, oftentimes this is going to be your last 2 pay stubs. Most people are paid bi-weekly, but you could be paid weekly. So then it'd be your last 4 paycheck stubs. The other thing we're going to look for is your last 2 months of bank statements. So what we're looking for in your bank statements is A, do you have enough money for the transaction costs, right? The earnest money deposit and closing costs. Now, if the seller's paying your closing costs, we don't need to see that in the bank, but we need to also see if you're treating your bank account appropriately as well, right? If every month your bank account is overdrawn, that's going to be a negative for you in getting approved. So we want to make sure that you're managing your finances appropriately also. And they're also looking for any irregular or large deposits that might need some explanation. Your DD-214. So if you're a veteran, you're out of the military now and you served in active duty, your DD-214 is your discharge document that shows when you entered, when you got out. It shows what medals and awards and things that you won, what your job was and stuff. And it shows if you're discharged honorably or dishonorably or general or whatever your discharge status is what that DD-214 shows as well. If you're in the National Guard, it's going to be your NGB 22 is what that document is called. But either way, it's your end of service document that shows how long you served, because that's one of the requirements of the VA loan. We've got to see how long you served to make sure you're eligible for the VA loan. And if you are going to get a gift, right? If mom and dad are going to give you some money to help you buy your first house, this conversation you have to have with them, because I've seen so many parents dig their heels in and get frustrated when we ask them for the documentation. When you're getting gift money from somebody, on the lending side, we have to prove where that money came from. Which if they're pulling it out of their personal savings account, then yes, we have to see a bank statement of their personal savings account, and they can't black out their account number. They can't black out their name. They got to show it to us just as is. So if you're in that situation and mom and dad are going to give you a couple bucks to help buy your house, that's totally allowed. But make sure you have that conversation. So once you're in the middle of your purchase, you don't have this additional stress and this additional hurdle to overcome. I've actually seen one time where it completely collapsed the deal because mom and dad were unwilling to provide that information, and the deal ended up going south because of that reason. So make sure you have that conversation if you're in a situation where you're going to be getting some gift funds from a friend or a family member. Budget calculation. Now, I advise everybody, if you don't do a personal budget, a personal monthly budget for you and your family, then this is a really appropriate time to do that. My advice is go back through your last 3 months of bank statements. I know if you never do it, this is going to be kind of an arduous task, but it's a really important one because you got to figure out like where you're going to be comfortable spending money on a mortgage. Now, if you've been renting for a long time or living on base, you're not going to be accustomed to what maybe your mortgage payment is going to be. Your mortgage payment might be a little bit higher. So you need to understand what you're going to be comfortable with in your budget and make sure that you have that figured out before you jump into a house, because there's often times where we're able to approve you for more than what you're comfortable spending each month, or what's appropriate for you and your family. So you need to understand what this number is, and it'll also be a good exercise so you can evaluate where your spending habits are, right? Maybe you could tone down the eating out or the Uber Eats a little bit or the DoorDash and trim that a little bit, because those can be some expenses that are easy to control by just eating at home and might afford you a little bit more home or allow you to get into that house you really wanted, because now I've got an extra 100 or 200 bucks in the personal monthly budget that now makes you comfortable with it. It's the same outflow of cash, we're just reallocating where it goes. The other thing is, if you're active duty, depending on the part of the country you're moving to, oftentimes your BAH amount isn't going to be quite enough to cover what a mortgage is going to run you in that area. I know that sounds counterintuitive because that's what BAH is for, is to cover that housing expense. So what I tell people is factor your BAH amount plus a couple $100. That's where you need to probably be comfortable on your monthly budget if you're still active duty. So plan on digging into your own pay beyond the BAH, a couple $100, and that should put you probably in an appropriate mortgage range for that part of the country where you're looking to buy, so you can get into a house. Next, you want to get pre-approved. This is the best first step. I'm going to say it again. The best first step is get pre-approved. Don't run out and talk to a real estate agent, because they can't really do much for you until they know how much you can buy. The lender is going to help you determine how much you can buy. So start with that step first. And if you're dealing with a good lender who has a really vast network, they're going to know who the right realtors are for you as well, who are really good, experienced buyer's agents who handle a lot of military clients and know how to address any obstacles that may come up and know how to look at the properties to make sure the property is going to pass the VA guidelines as well. So it's important that you start with the pre-approval first. Get the financing piece figured out. That will then open up the realtor's ability to show you houses that fit within your budget and get you into something that's appropriate for that market. Certificate of eligibility. All right, so the certificate of eligibility is something that we need for all VA loans. Now, as a lender, we have access to the VA's lender portal, so we can actually pull this for you. The VA says about 20% of all eligible veterans' certificate of eligibility is not in their electronic system. I know it's the government, it's the VA, that stuff just happens, and there's no consistency to it. It's not like a certain era aren't in there. It could be someone who, served 3 years ago. It should be in there in today's digital age, and it just doesn't exist. So we want to make sure that when you're applying to get pre-approved, you've got a little bit of runway ahead of you. The last thing you want to do is go out this weekend, look at an open house, fall totally in love with the home, talk to the realtor. The realtor says you got to get pre-approved. You go talk to the lender. Now it's rush, 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 jam, jam, jam. Oh, and come to find out, your certificate of eligibility is not in the VA portal. Now we got to go through the application process. So now we've just baked in some delay. We want to try and eliminate any delays or any headaches ahead of time. So we want to tackle this piece first. So give yourself some runway. Don't go look at a house and have to buy today. You want to give yourself some time, get pre-approved and get all your docs in a row. So that way you can have a successful, smooth closing process. You got to complete the loan application process, right? So on the lending side, not only do we need the information from you, but we need to validate the information. So yes, we need to know how much you make, but we have to also look at the pay stubs and do our own calculations. Sometimes people might think their salary is a certain number and they're off. Sometimes a little low, sometimes they're a little high, or maybe there's some other deductions that come out of their pay, which we also have to pull out. So there's an appropriate way for us to calculate the income so that your loan will get approved, right? So it's important that you have all the documentation submitted. For me and my team, we only will distribute a pre-approval letter if we've reviewed all of the required documents. If we don't have them, we've got, 8 out of 10, we're not going to distribute that pre-approval letter until we have everything, because we want to be able to stand firmly behind our pre-approval so that you don't have any challenges when you purchase your home. So it is going to require you provide those documents, which we listed earlier. Super important so we can verify and validate everything. Next is receiving your pre-approval. So once we finished all this stuff, we will then be able to issue your pre-approval letter and have your pre-approval consultation where we can walk you through exactly what we've come up with, make sure it fits in budgetarily with you, go over different what-if scenarios, talk about your cash to close, and also go through some different buying strategies and tactics that are working currently in the market. Also, we'll cover with you what the process looks like. So what is the whole home buying process? What are all the steps? How much time does it take? When do I need to spend money on this thing? When is money going to leave my bank account? So we'll go over all of that once your pre-approval application is completed, and we can have that consultation and get you your pre-approval letter. All right, so you probably heard pre-qualification or pre-qual. And then I just said pre-approval. What's the difference? Well, it can be up for definition depending on how people view those two terms. In most situations, a pre-approval is a step above a pre-qualification. So what the differences mean, typically a pre-approval means we've looked at and verified all the supporting documentation to say you can go buy a house up to X dollars. A pre-qualification is you typed in some information or shared some information, and we did some math based on what you said and maybe looked at credit, and here's a pretty good idea of what you qualify for, but it's not as firm or as confirmed as a pre-approval because we haven't validated and gone through paperwork yet. So ultimately, you want that pre-approval. That's what you desire, because then you know for sure, right? When we're just going off the pre-qualification, like I said, it could be one of those scenarios where you said your salary is such and such, and maybe it's a little bit less, or maybe it's a little bit more, or maybe there's a deduction on that paycheck. So it might be higher or lower than you actually got pre-qualified for. That's why the pre-approval is that much better. All right, so let's jump into the most fun part of the whole process, and that's the home search. So we got to get the pre-approval done. So you got all your ducks in a row. Now we're pre-approved. It's time to go house shopping. This is the fun part. This is where you get to grab that realtor and you guys get to go look around town at all the really cool houses. And in this home search process, once your pre-approval is done, you'll spend some time with your real estate agent. Your real estate agent is going to have a discussion with you about their process, what it looks like, and also go over your wants and needs. What do you want? What do you need in a house? What are absolute deal breakers? What are things you'd like to have, but if you didn't, still okay? Location, area, commute times, all that type of stuff, amenities nearby. You guys are going to go through all of that stuff so they can curate a specified search for you so that now in your inbox on a daily basis, you're going to be receiving emails of homes that fit your specific criteria. So you don't have to be out there searching Zillow and Redfin all the time, hitting all the filters and the drop downs. You're going to get stuff in your inbox the moment they hit the market with exactly what fits your minimum criteria. And then you get to go look at the houses. So after you've seen a couple online, you get excited about a couple, now you can go check them out for real. And sometimes the house in person looks different than the house on the photos. Sometimes it's better in person, sometimes it's worse in person. So you definitely want to check it out any opportunity that you can and go see those houses. This is the fun part. Enjoy it. Make it fun. Make it fun with your agent. It's a great time to get to know them. They'll get to know you. You guys will probably build a super tight bond just going through this process. So really, really take this in. It's a fun part of the whole thing. Now, as you're going out looking at these houses with your real estate agent, a good real estate agent who understands military and VA loans, when you guys are out looking at the home and you're getting excited about the countertops and this room or the garage or the yard or those different things, your realtor is actually looking at different stuff. Yes, they see those things and they've seen them on the pictures, but what they're actually looking for are the minimum property requirements that the VA has. That's for a different video on what exactly they are, but a good realtor is going to have their eyes out and be able to notice or mention things to you that might cause us a challenge during the process. Doesn't mean you can't buy the house all the time. Sometimes it might. Sometimes the house that they just know isn't going to work. So that's the other thing that your realtor is going to be keeping their eyes out for as you're walking through these properties. You're going to be looking for things that don't meet the VA's minimum requirements. Your agent also should be sharing with you some different negotiating tactics and strategies. If you want or need your closing costs paid for by the seller, you guys should walk through a couple different examples of how they've made it work before. Not every seller is going to react the same way as the last one, so it could require a little bit different approach with each seller, so they're going to walk you through that. They're going to walk you through the VA appraisal process, what that's like, the tidewater, the reconsideration of value if we have appraisal challenges, what the minimum property requirements are, so what the VA is looking for to make sure that house is going to be approvable by the VA. And they're going to be able to educate you on just the whole home buying and selling process so that you have a good concept and a good educational foundation so that as you're looking at homes, you can make an educated decision. For a lot of our military clients who are active duty, not only is buying a home putting a roof over their head, but buying that home is part of their real estate investment strategy, part of their retirement package. So as you're out looking at homes, your real estate agent is going to be helping you to navigate, hey, will this become a good rental property in the future when I get my next set of orders to go to another duty station? Will this be a good place for me to rent out or not? And sometimes house A may not be a good rental property in the future, where house B might be a really good rental property in the future. And you might be maybe attracted more to house A for specific reasons, but house B might be the smarter purchase. And you need a good real estate agent to understand what your long-term real estate goals are so that as you're looking at homes, you're able to pick the right one and hit all of your needs. All right, so negotiation time. It's time to make the offer. So you and your real estate agent are going to sit down and craft this together. So how this is going to look is, let's say you picked a Saturday and you went and looked at several houses. You guys get through the end of the day, you're debriefing with your real estate agent, and you know, house number 2 is just really pulling at your heart. Like, you just love that house. You can envision your family there. You can almost see like where your furniture is going to go and how the neighborhood's going to be and the drive to work. Like, you can just envision yourself living there. Then that's the home you want to write an offer on. So as you guys debrief with your real estate agent, you guys are going to talk about, number 1, the headline mark on that thing. What's the price, right? That's the biggest neon sign line that we're going to see in this whole thing, is what is the price of this home? And is it accurately or fairly priced? Now, you'd be surprised. Sometimes people will put their house on the market and be way overpriced. And that could be either a bad real estate agent or a seller who's not listening to the real estate agent, or a combination of the two. But your realtor is going to be able to help you determine if the price they're asking is fair for the market. And provided it is, and usually it is, you guys will know about where you need to land on price. From there, what your real estate agent is going to do is they're going to ring the phone and call the agent that's representing the seller. And they're going to try and extract as much intelligence out of them as they can to provide you some information to make a really good offer. So amongst all the questions they're going to ask, one of the more important questions they're going to ask is, why are they moving? And is there a timeline associated that we need to meet to help them with their move? Why that's important is because beyond the purchase price of your offer, there's other components in your offer that are timing related and speed related. And sometimes those components of your offer may be what gets you into the contract on the house versus another buyer. So they're going to ask that seller, why are they moving? Hey, maybe it's another military family and they're PCSing. Hey, maybe they drug their feet on getting their house listed for sale and they're in a pinch for time and they got to go fast. So they need someone who can execute quickly. That's important information to know, and can be really important on your lender selection as well, because not all lenders are created equal. We can close VA loans in 10 days. There are some lenders who can't do it in less than 45. So it's important to understand that piece of it as you guys craft your offer, because if you're competing against somebody who's coming in with a 30-day offer and you know that seller needs to be out of there ASAP, and you come in with a 20-day offer, chances are good, just based on those two factors alone, your stock value already is higher in the seller's eyes because you can get closer to meeting their needs. So that's going to be something that's super important to understand. There's going to be other components of the house that are going to be important to understand as well. Maybe they got that pool table that's, an heirloom from great-great-grandfather. Don't ask for it. Okay, well, that's good information to know about as you're going in. Obviously, that's probably not an important thing, but just using it as an example, that way you're crafting this offer to meet the seller's needs. We're also going to talk to you about strategy. Now, oftentimes we think as a consumer, price. And price is where I get the victory, right? They're asking $300. I want to give them $290. I want to win. I want that victory on the purchase price. That's not always the smartest place to place the victory tag. Ultimately, especially if there's a little bit of competition on a home, the place to find the mark of victory is getting the home, not the price. Because in a $10,000 difference on purchase price in today's current interest rates, in financing, that's only about $60 a month in monthly payment. So if it costs you $60 a month to have the house or 10 grand and you lose the house, what would you rather have? Would you rather have the house and a $60 more payment, or would you rather save $60 and go find a house at that $10,000 cheaper price? So that's something to be kept into mind as you're looking at making offers is, what is our price going to be, and is it going to meet what the seller's needs are? This offer component is really a poker game. It's a little bit of strategy and psychology because we don't know exactly what the seller is expecting to get in their pocket when all is said and done, their net proceeds. But we also want to make sure that your desires and what you want out of the transaction are not so far out of alignment that you kill the opportunity to get the house right out of the gate. So this negotiation part is going to be super important with you and your realtor to be in sync and go over different strategies and different approaches that they think might help you get the offer accepted. Contained within your purchase agreement, beyond just when are you going to close, that's the most significant date on the contract. So your purchase price and when are you going to close are two of the biggest headline items on that contract. There's some other smaller things in there though that are very important, and sometimes, like I mentioned, might push you over the edge to winning that property. One of them is your inspection contingencies, your appraisal contingencies, and your financing contingencies. So what contingencies are legal clauses within the contract that basically specify the opportunity for you to sign off on that part of the contract being complete and meeting satisfactory to your desires. So a inspection contingency is an opportunity for you also to back out of the transaction. If you get the home inspection or the appraisal inspection back and it doesn't meet what you were expecting, or it doesn't meet the value, or there's problems with the home, that contingency is your legal clause that allows you to escape the contract and not lose any money and not be hurt or harmed by it. Same thing with the financing contingency. Should something happen in the financing and your loan get declined, well, then there's an opportunity for you to get out of the transaction unscathed because you have those contingencies. But all these contingencies have a timing mechanism to them when they expire within the deal. The more you can shrink those, typically the more aggressive that makes you look, the more committed and the more solid of a buyer that can make you look. So again, kind of back to that strategy of psychology a little bit of the poker hand, like how committed, how strong are you? Another piece of this is going to be your earnest money deposit. Your earnest money deposit is something that's due within 3 days after your offer is accepted. It's wired to the settlement agent, which is either the title company or escrow company, depending on the state you're buying in. And that money represents your commitment to the transaction. It basically means, hey, Mr. and Mrs. Seller, I plan to close on this home. That is my ignition. I'm going to close on this. Now, if there's something like a contingency, like an inspection or something that makes me want to back out, well, I'm protected. But if I get cold feet and I just say, hey, I don't want to buy a house anymore, I just quit. Well, in that example, the seller has the ability to keep that earnest money deposit. It's not a guarantee, but they have the ability to keep it if you just want to back out for no contractually protected reason. So that's going to be an important piece also in your negotiation, is how much is that earnest money deposit. On a home that's receiving a lot of offers, as a hot property, maybe it was just on the market, getting a lot of activity, a stronger deposit may, from a psychological standpoint, look to the seller to make you look more important, more committed, more serious. So some tips on strengthening your offer is obviously don't get them too low on the purchase price. That can kick you out right away. But a stronger earnest money deposit can help. Shrinking the timelines, contingency timelines, or the total closing timeline can also help. Not asking for too much can help you get your offer accepted as well. And having a strong lender that's going to come in and support you when it's time for the offer. A lender that's going to pick up the phone and try and sell the listing agent on why they need to take your offer. All of those are going to be important components. Your realtor as well. They need to be calling and selling your offer to the listing agent after you've made that offer also. All hands on deck, pushing forward to make your offer undeniably the best one that they have on the table at the time. So let's talk about the closing process. So we finally got the offer accepted. You negotiated all the terms. It's time to go. So now we're going to really start getting through the loan. Your loan's going to go through underwriting. All the inspections are going to take place. We're going to move through this thing in the timeline that's been dictated by your contract. If we got to move fast, it's going to be fast. If we got a lot of time, we're going to move as fast as possible to keep a buffer on the back end just in case, right? But we're going to move through this as quickly as we can and get you all the way to the closing. There's several steps within this process that we'll go over in another video, but all your inspections, the underwriting, and you're finally going to get to closing. Your closing is going to be the accumulation of all the efforts that everyone's taken place here. So the appraiser, the title company, the insurance company, you providing the documentation, signing the documents, providing everything the lender requires in a quick, timely manner. All this is going to get you to the finish line and what's going to get you closed. Part of this process is going to be the VA appraisal. So you heard me mention inspections. Typically, you're going to have at least 2 inspections. You're going to have a home inspection, which is not needed for the mortgage, and you're going to have an appraisal. The appraisal is required for the mortgage. Both of them are going to give you information and detail about the property. The home inspection is going to be your behind the curtains peek at exactly what's going on with this house, right? Has the home been well maintained? Is there a lot of deferred maintenance? What's going on with the place? The appraisal is there to tell you if the price you and the seller agreed to is supported by the market. Contrary to what you might be thinking, the appraisal is not there to show you what the highest value of the place is. The appraiser's job is to make sure that the price the seller and the buyer agreed to is supported by the market. It's not some outlandish, super high number that the market doesn't support. Now, if it's a VA appraisal, the VA has minimum property requirements, which you've heard me mention earlier in the video, and the minimum property requirements are something the VA appraiser will look for. And if they see something that doesn't meet the VA's requirements, they're going to note it on the appraisal. It's got to be addressed before we can get to closing. So once we have all the appraisal items, your loan is fully underwritten and approved, you'll get to the final signing table with the settlement agent or a mobile notary and sign your final loan documents. They'll be notarized, then the loan will fund, and your deed of trust will get recorded by the county, and that makes it official. Once the deed of trust is recorded, your realtor will meet with you, deliver the keys, and now you're a homeowner. So how long does this whole process take? The typical VA lender is going to take at least 30 days. Some of the big companies you've heard of that are credit unions and all the Navy bases, they're going to take 45 to 90 days. So depending on who you go with, the bigger the name, probably the slower that they are. But our average turn time is about 20 days on our VA purchases. Many of the times we're doing them in 10 to 14 days. So if speed is what you need, we got your back. So buying your first home with your VA benefit is one of the smartest decisions you can make. It can make you and save you thousands of dollars, especially compared to some of the other loan products out there. It's your benefit. You've earned it. It is the most powerful financing tool out there for residential real estate, and you absolutely need to take advantage of it. The journey from being a renter to a homeowner really is preparation, making sure that you have all the things we mentioned in today's video lined up and ready to go. Today, we covered the VA Loan Advantage, your financial preparation, getting pre-approved, the home search, making an offer, and the closing process. If you found this helpful, hit that subscribe button, give us a like, and share this with somebody you know who might be looking to use their VA loan benefit to buy a house. Thanks. We'll see you on the next one.